Okay, so let's go through each one of these transactions. So first we have that we've started the company and we invested $80,000. So we gave $80,000 in cash to the business. The business now has $80,000 in cash. That is an asset. We received 8,000 shares of stock at $10 per share. So now we have $80,000 in equity. So if we look at our accounting equation, we have assets 80,000, liabilities 0, and equity 80,000. We're going to look through more of these transactions, but I'm going to do it in a different video in Excel. So now we're going to go through and we're going to get to the next. As I said, I'm going to go through these transactions in detail on Excel. Now we have this example where we have assets, equation examples, and I'm going to write on these, get pen here. So this is the accounting equation if we have assets equals liabilities plus equity, and we want to fill in the blanks. So here we have assets equals liabilities plus equity. Liabilities are 20,000 and equity is 45,000. We add those together and that means our assets have to be 65,000. And please forgive my writing here. It's not great using the computer. So now we have assets equal 100,000. And that equals liabilities plus equity. So we have to subtract the liabilities amount from the asset amount in order to figure out what the equity is and balance our equation. So 66,000 is, so now we have 34,000 plus 64,000 equals 100,000. Okay. Same thing, 154,000 in assets equals liabilities plus equity. Well, if you have 40,000 in equity, then we have to have 114,000 in liabilities. If we have liabilities and equity and we add them together, we get that liabilities plus equity equals 192 in assets. Okay, and then so forth throughout the example. Okay, another accounting equation example. So we have this information at the beginning of the year. Company assets are $300,000 and its equity is 100,000. So remember our accounting equation. If assets are 300,000, it has to equal equity plus liability. If equity is 100,000, that means liabilities is 200,000. Okay? So during the year, assets increase by 80,000 and liabilities increase 50,000. So what is the equity at the end of the year? So we have at the end of the year assets of 380,000 and we have now liabilities of 250,000 because we started with 200,000 and we increased by 50,000. So our end of year equity has to be whatever makes this equation true. So our end of year equity is 130,000. Okay, and we'll do more of these examples in Excel. Okay, now we're going to talk about financial statements. So financial statements are used for external financial reporting. Corporations are required to post their financial statements publicly so that anyone can access them. this is required by the US government and the SEC, or the Securities and Exchange Commission that we talked about earlier. So the financial reports provide information about how well the company is doing and whether or not they are a good investment. So if we would be interested in buying stocks from them. And it tells us information about what they own. So we're going to talk about the different types of financial statements. So we have a balance sheet. The balance sheet shows us what is true about the company's accounts on a specific date. This is sometimes also called the statement of financial position. The balance sheet is the accounting equation. So the balance sheet shows your assets, your liabilities, and equity. And when we say it balances, that means that your assets equal your liabilities plus equity. So the balance sheet is the financial statement of the accounting equation. The income statement is our revenue and expenses during a period of time. So either a month or a quarter or a year, but it's revenue minus expenses equals income. The statement of retained earnings explains any changes in our retained earnings over time. So this is our beginning retained earnings plus our net income or loss, and then removing any dividends. If we paid dividends, gives us our ending retained earnings. Like I said, this is all brand new information, and we're going to spend a lot of time this semester talking about this over and over again. And then the statement of cash flows, which shows the details of a company's activities involving cash. We are going to be focusing on the balance sheet, the income statement, and the statement of retained earnings. Chapter 12, I think it's chapter 12. At the end of the semester, we'll have a chapter devoted entirely to the statement of cash flows, and we're not going to be looking at the statement of cash flows until then. So we have some examples of what those financial statements look like for companies. You can see at the top is the income statement, where we have revenues minus expenses equals net income. Our statement of retained earnings, which says that we received net income of $4,400. We paid out dividends of $200. We have ending retained earnings of $4,200. And then our balance sheet, which is a listing of all of our assets, liabilities, and equity, and shows that assets equal liabilities plus equity. We are going to make financial statements in Excel in a next video. So here we have the balance sheet and then the statement of cash flows for this company. As I said, we're not going to be making statements of cash flows right now. We are going to save that for the chapter on cash flows. Okay, so we are going to use this company's information to create financial statements, and we're going to be doing that in Excel on the Excel example video. Okay, we're also going to fill out this sheet on the Excel example video. That is the end of chapter 1 and all of the content in chapter 1. Next, I'm going to switch over to doing some examples in Excel.